welcome back to the channel, guys. My name is Jess. So Bitcoin has had a rough 24 hours. Over the last couple of days of slow build up and finally another retest of 63k resistance, the price is now back down between 60 and 61k yet again. But before you let the price action bore you to death, let's dive into the short time frame charts to talk about why Bitcoin is actually looking very bullish for a break above 63k very soon. We'll also dive into the recent PPI data as well as its potential effects on the upcoming CPI data coming out tonight, and take a look at the macro charts. But before we get into all of that, make sure you guys like and subscribe to the channel down below to get regular Bitcoin analysis every Wednesday and Saturday, and ring that notification button so you never miss an episode. If you want even more content, check out my free Telegram over here where you can get daily Bitcoin analysis as well as crypto and economic news. If you're interested in my VIP trading channel, you can get more details over here. VIP gives you exclusive access to my personal crypto trades, at least 3 of them a week, fully justified with exact entry points, stop losses, and targets. Alrighty guys, as per usual, let's start off the video by talking about what on earth has happened over the last couple of days or since my last video. So in my very last video, we had just had a very bearish move and another validation point for this $60,000 or $63,000 resistance right here. So I've marked it out. This is the relevant range for this piece of resistance, and we fell down to test our macro base of support at $60,000, right? So on the short time frame, things weren't looking all that great. We just had a very bearish move, but we had established support at this macro range. So in terms of relevant trading range, nothing has really changed in the last couple of days. Obviously, we're still very much within that huge range of consolidation, so that being our 60k level of support here and that 73k level of macro resistance, right? And then the last couple of months, more recently, we have just been strictly consolidating in the lower levels of that channel, being the top being the midline, so $67,000, the middle of the channel, and that base of support here at 60k, right? So in that last video, you know, obviously the short time frame wasn't looking all that great, but what I did say was we were forming a higher low or a potential uptrend in these higher time frame charts for the first time in about a month, right? Prior to this, we were just strictly traveling in a downtrend, right, for about a month and a half. So the higher time frame charts were looking quite good, and the fact that we had established support at $60,000 was a good sign. So moving to the last couple of days, right? The last couple of days, we ended up bouncing on that 60k region, and we've been traveling slowly up and retested that 63k macro, or not macro, short time frame support. But on that retest, unfortunately, we did end up forming another rejection, so a double rejection or double top formation, and getting another flash downwards alongside some very bearish PPI data here as well. So let's dive into this more recent segment of price action, the last couple of days of price action, and talk about why I think it's actually looking very, very bullish for a breakout above 63k very soon. Before we get into any more analysis, guys, let's hear a quick word from our sponsor, Bitunix. Bitunix is an emerging cryptocurrency exchange committed to providing you with a secure, convenient, and highly functional trading and investment platform. Available across all countries as a non-KYC exchange, get global access to over 150 trading pairs with minimal fees on both spot and futures contracts. Join today to get $5,500 in sign-up rewards and get 15% off all of your trading fees by signing up using the link in my bio or by using the code 1GG3 when you create your account. Okay, so diving back into the charts, guys, let's talk about why I think that we should be breaking out of the 63k resistance sometime soon. So when we look for breakouts or, you know, any sort of reversal pattern, the very first things we want to identify are those horizontal levels, which we've already done. So 60k support. And most recently, we can see that we have bounced on that level over here, right? So support is support until it's not. And so while we're above support, after bouncing on it, we should be in an upwards trajectory. So straight away, we can see we have horizontal confirmation that the price should be going upwards. And then if we take a look at our most recent rejection from $63,000, we can see that despite that move downwards, as well as the negative economic news last night, we are still in a very strong short time frame uptrend. So we can see 1, 2, 3 points of validation here for that uptrend. And this uptrend has confirmation on the RSI as well. So the RSI is also showing decreasing selling pressure at these levels of resistance over here. At these levels of support over here. So the price is compressing upwards, right? Especially on this short time frame, we can see that that uptrend is very, very strong. So we have momentum confirmation, we have horizontal confirmation, and we can see on the price action, we are in a pattern of bullish compression. So we have pattern confirmation. So we have 3 points of confirmation that the price should be going upwards and we should be breaking over this level of resistance. So if we take a closer look at the RSI, the main thing that we can see that's obviously very bullish is, the trend line, the uptrend over here. But what we can also see is we are seeing decreasing selling pressure at this level of resistance over here at $63,000, right? So that tells us that these two recent tests of $63,000, we are slowly eating away at the sell wall that we have at this level, because the buying volume or the buying pressure that we have at these moves here towards the upside or towards this level of resistance, they're decreasing. But despite that, we're still pushing upwards to these levels of resistance, right? So that's telling us that we have a weakening sell wall. So this bullish compression is also, you might call it a ascending triangle formation. So let's draw that in. And usually with these ascending triangle formations, we have 3 retests of the base. So while that is a piece of confirmation, we want like 3 retests in terms of a move upwards and then back downwards. So let's draw that in. So we've had 1, 2 retests. We're looking for another test of $63,000. And if we don't break there, then that will be our 3rd retest of the uptrend before we get our breakout over here. So the measured move of an ascending triangle pattern is from the top of the horizontal base of resistance or horizontal level of resistance to the lowest point of our uptrend. And if we apply that to the breakout point, it actually takes us to a really significant level of resistance. So applied to 63K, it takes us right up to $67,000, which is the midline of our massive range of resistance or consolidation over here, right? So that has huge macro implications. As we know, a test of $67,000 is extremely bullish, particularly since we are testing $67,000 from a position of increasing strength for the first time in a while. So the breakout, the potential for a breakout above 67 is huge, and that will take us right back up to these upper levels, right? Upper levels of this huge level of consolidation. So once again, we might start to see tests of 73K, of 69K, those higher levels of resistance that we're really targeting in order to break out and see the price discovery again. So while the uptrend over here is still intact, the pattern is intact. So even if we consolidate up and down for a while and more than 3 retests, while the uptrend remains intact, we can see continued compression against this level of resistance. So that is our confirmation that we should still be seeing a breakout. In terms of bearish invalidation, that's pretty obvious. If we lose our short time frame uptrend and we go down, below to any of these lower levels of support over here, we know that the pattern has been invalidated. So we're no longer seeing that compression, and very likely in that scenario, we will also lose our RSI uptrend. So momentum will be going back down, seeing a sudden change of selling pressure, and that has increased. So that will be our bearish confirmation on the short time frame that we are going to continue going downwards, and we're not going to see that breakout anytime soon. In terms of the macro continuation of a bearish case scenario though, just like in my very last video, that's going to require a fair bit more movement downwards. So we would need to break below 60K support and invalidate this formation of that higher low that we talked about just before, right? So that move below $60,000 and a break below 57K macro support as well. But so that's obviously a while away, and we're still holding support is support until it's not. So 60K is still intact. But those are the things you should be looking for in terms of, not going to happen. So we know that this breakout here of $63,000 takes us to a really key level of resistance, right? That 67K midline. But what we can also see is that it takes us above this really key level of resistance here at 65.5K as well. So if we zoom in, just strictly talking about the short time frame here, we zoom into the hourly chart, we can see that it was this initial rejection from 65.5 that took us all the way down to these lower levels at 60K over here, right? So it's a massive level of resistance. And if we go onto the macro charts, we can also see that 65.5 is the weekly candle close for the 2021 all-time high. So we know that testing at this level over here at 65.5 and potentially breaking above it means that we start to consolidate within this macro range of resistance on the weekly chart. So that macro range of resistance is, as you can see over here, from 65.5, I don't know why I decided to write that, that's going to take too much time, 65.5 to $69,000. So that means one of two things. So first of all, we're consolidating within that macro range of resistance. So we're bouncing on this macro range of support, moving into this range of resistance, right? So full on reversal here on the macro charts. And on top of that, it also means that if we zoom out onto the 4-hour chart again, we are once again testing these upper ranges of support. So for all intents and purposes, while this move, is in itself small, it has some very, very strong macro implications, right? Because we are seeing the very start of potentially a high time frame reversal back up to test these ranges of resistance and go back out here into price discovery. So essentially, even if we don't get this full measured move here all the way up to $67,000, just the fact that we have gotten a support resistance flip of $63,000 over here should take us to test our local high here at 65.5, and that itself has macro bullish implications, right? So overall, guys, the charts are looking very, very good. Now, before I round off this video, I do really quickly want to talk about last night's economic data as well as upcoming economic data. So last night we had PPI, or Producer Price Index. I always slur it. I can't say it. It's like Sally sells seashells. I can't say it. Anyways, Producer Price Index came out and it was pretty bearish. So in this specific circumstance where we're waiting for interest rates to be going down, the fact that PPI is higher than we're expecting is generally, bearish for that, because PPI is a leading indicator for inflation, because if producers are experiencing higher costs, they generally push these onto consumers. So that in turn affects CPI. So we have CPI/inflation data coming out tonight, and we are expecting month-on-month inflation to be going down, right? We have forecasted 0.3%. And so the market might react quite heavily to this news, or it might also, over the next couple of hours leading up to this, continue to react bearishly because of PPI. So we've already seen a little bit of that. If we go back onto the Bitcoin chart, over here we had a 1.3% drop in just under a minute when that PPI data came out. So I would be expecting some increased volatility, guys, over the next couple of hours, particularly when we see that CPI data coming out. Potentially we see a move to somewhere around this channel and then a flash crash. But as long as we get that 4-hour candle close back above this little level over here, the trend line is still valid. Alrighty guys, that is it for the analysis for today. If you enjoyed the video or you learned something, don't forget to like and subscribe to the channel down below. If you want even more content, be sure to check out the Telegram channel for daily Bitcoin updates as well as crypto and economic news. If you're interested in my VIP channel, you can get more details over here. VIP gives you exclusive access to my personal crypto trades, at least 3 of them a week, fully justified with exact entry points, targets, and stop losses. If you are a trader, use the code down below to sign up to Bitunix and get $5,500 in rewards and up to 15% off your trading fees. Hope you guys have a really great week, and I'll see you next time. Bye!